A brief intro. There are people here who are meeting me for the first time, so I thought I'll just spend a minute on that. So I'm Prabha Srinivasan. I'm a founder, CEO of Ventura Pranas. It is a cross-border advisory and compliance firm specializing in US and India tax and compliance and advisory. And we are a 100-member team, and we're located between Chennai, Los Angeles, Trichy, and Bangalore. I'm dual certified, and that was the genesis of the firm, and we've grown since our formation in 2011.
So if I have existing real estate laws in US, can that be adjusted against the capital gain from the sale of Indian property? This is from Mr. Sridhar.
Okay. The question is, can I use US carryovers of capital gains losses to offset gains generated from India? The answer is absolutely yes. When I get clients and they ask me a question saying, oh, can I get a deduction? Can I get an off? What's my total tax bill? My first question is, do you have carryovers in the US? And I always say, please share your return with me so it'll give me an idea as to what other areas we can tap into. So the answer is yes. And it does not have to be real estate loss. Let me also put it out there. It can be capital losses generated from the capital markets. So you've got a lot more flexibility.
And it could be either short term and long.
Yeah, and it either can be short term or long term, correct. Yeah.
And the next question is from Mr. Dushan Desai. Inheritance not held for 2 years, then what?
If the inheritance is not held for 2 years, does not matter actually, because this is a classic case of a combination of a gift and inheritance, where the holding period of the decedent passes on to the inheritor. So if the person who passed away held it for a long-term duration, then by default it becomes long-term in your hands.
Okay. The next question is, when an Indian citizen father settles his residential property to his son, a US citizen, through a settlement deed in India, is it considered as an inheritance, sale or gift? This is from Ms. Veena.
If it is a settlement deed, it is deemed to be a lifetime gift. Okay, so only if it comes through a will, it would be considered a bequest, in which case you get the step up in value. But otherwise, it will be treated as a lifetime gift from the donor to the donee.
I am an OCI card holder, US citizen, residing in India. My wife is an Indian citizen. I have a residential property purchased in 1990s. Can I transfer it to her name and then she sells it for tax benefit? This is from Mr. and Mrs. Uma.
Absolutely, yes. It's a brilliant combination. So I think the only thing to keep in mind is that there are limits to transfers from a US person to a non-US spouse. So, generally in the US, if you have gifts between spouses, it's not even considered a gift, so it doesn't tap into your exemption. But if you're going to give it to a non-US spouse, you can't do any more than 150K per year. If you do more than 150K, you're going to eat up some of that 13 million exemption that I gave you an example of. So it costs you something, but it will cost you so much less in taxes. So I think it will work. It will work subject to these conditions. Yeah.
Is it correct that there are no federal and state taxes on the sale or development of an inherited property in India? Is it correct that there is no federal and state?
Of an inherited property subject to the calculations I told you. If your cost basis, because of the step up in value to the value on the date of death completely whittles down the gains because you sell it, you develop it and you sell it, and as a result of which your sale proceeds net of your now revised cost results in a loss, the answer is yes, it could escape federal and state tax. So I want to say subject to certain caveats.
Can you please repeat the 12 million gift exemption limit?
Okay. So in the US, India fortunately right now does not have an estate duty. Okay, so any time I make reference to estate taxes, it's US only. And US says today, if you're a US citizen and if you are single and if you pass away, if your total net worth on the date of death is 12.92 million, we don't get a dime in estate taxes. You double that for a married filing joint couple. Okay, so if you're married, between the two of you, you've got $26 million. Now, this 12.92, if it's left intact, you get all of it when you die. if you used it during your lifetime to make certain transfers during your lifetime, to that extent, that 12.92 will keep shrinking and you'll have that much less by the time you pass away. Now, all this is great under the current rules, and I've just stated to you that are set to sunset effective Jan 1st, 2026, which takes it back to $6 million adjusted for inflation. So what was it? What is a $26 million estate exemption in the US? It's going to more than half. It's going to become 12 million adjusted for exemption, inflation for a married filing joint couple. I'm hopeful that this is explanation enough. Yeah.
Is it possible for an Indian parent can revoke the property settlement to a US person and then create a will for the same property?
That's a legal question. I'm guessing, I don't know if these are irrevocable gifts. One would have to look at the settlement deed. I've had questions where we've had to unwind, but it allowed a provision to unwind a settlement deed. I think it would have to, it's contingent on the contents of that settlement deed. You would have to seek legal counsel on it.
Do I have to probate my dad's will in India and or in US? Father is an Indian citizen.
For an Indian citizen.
Father is an Indian citizen.
Father is an Indian citizen.
And he wants to know whether the dad's will needs to be probated or not.
If it's an Indian will, Indian assets, it absolutely needs to be probated. Yeah. But it won't have to be, nothing US. US can't touch these wills. It's outside the jurisdiction of the US courts. It would only have to be an Indian court.
Credit for foreign tax paid is via the FTC, right?
That's
it
correct.
is taken years to recover.
It could take years to recover. That is correct. And you at least have the ability to carry forward unutilized credits, and you get up to 10 years to use it. So keep that in mind. You know, if you've got foreign tax credits generated in India because you sold a property, you paid the tax, you didn't have a tax outcome in the US, and so you've got these credits, you don't know what to do with it. My point to you is at least you have the ability to carry it forward. If you have other financial assets in India that generate gains in the future, it has to be passive. Okay, so let's say you invested in bonds and you've got an interest income in India, you know, and technically you could use it, but the issue with that is you would have also paid India tax when the earnings arise. So it has to be a situation where you don't have much of India tax on that income, where these credits in the US will allow you to offset the federal tax bill. So my answer is, you do have it, at least if you want to use it. Maybe you could have another property that you sell and create a situation where you don't have much of taxes in India. You can use your Section 54 on that and then use these credits on the US side to offset the US tax bill.
For the repatriation of sale proceeds of Indian property, is it depend on whether the purchase consideration was remitted in from the US or sourced locality, or is it there in the annual cap or on amount?
So this is a great question. In all frankness, I had to look it up as well just to be sure I covered my grounds. Source matters, okay? So if the currency for the purchase came in from abroad, that becomes your cap to take out. Okay, and all gains on it is also fully repatriable. If the currency was sourced out of an NRO account in India, either your own or the person who purchased it, even if you inherited it and it came out of their resident funds, then it will be subject to the $1 million cap when you take your funds out.
Regarding the 12 million gift exemption, spouse Indian, i.e. US citizen residing in India, better to file joint or single for 12 million limit?
You know, it's a good idea to file jointly only because you're establishing that you are a married couple from a US standpoint. You both have, unless she's got a ton of Indian assets and you want to keep it out of the US because it was more tax efficient going forward. So my answer to you is, as long as the marriage is, if there is a huge tax impact on your filings as a result of separating it, then it may make sense. Yeah.
I am a green card holder. I have a property gifted to me before I get the green card. If I gift it to my daughter, 17 years, and a green card holder, does it require me or my daughter any tax liability?
It's the same, it is the same. We've already covered that. So it does not matter that you were not a green card holder at the time you got it. The fact is you're a green card holder today, which means all the US rules apply, which means if you transfer it to her, it would either be a gift or you can do it by way of inheritance upon your death. But all of the rules I took you through will apply to you. Nothing's going to change.
I'm a OCI card holder. If I sell a property in India, can I take the proceeds in US? You already
Yes.
told.
If I sell a property in India, can I take the proceeds out to the US?
Outside, yeah.
Yes, yes. So the answer is yes, subject to the caps under the FEMA, which we said was 250K if you happen to be in India. And if you leave India, make sure you've transferred your funds into a resident account, convert it to an NRO after you move, so then you can tap into your $1 million threshold after the move.
The next question, I am a resident alien in the US and plan to sell my residential property in India. I need your tax and FEMA services. What are the next steps?
Just get in touch with us. By
Okay.
email, yeah.
I am a green card holder. Can I transfer my Indian real estate property to my mother who is an Indian citizen for tax purposes? If yes, can my mother transfer the funds received from the sale of the property to my daughter who is a green card holder?
Yes, it can. It's not coming to you, it's going to your child. The answer is yes.
The last question, is there a way to recover the 23.92 TDS from NRI?
There is. I mean, you do, you have to go through the motions. No tax guy is going to release it without putting you through the pain of a full scrutiny. You'll have to go through it. We have got a situation where somebody sold over 2 years ago and is still struggling to get his refunds back. So, it doesn't come without going through cycles of this. And if the officer changes on you, well, lo and behold, you start from scratch again. So, the answer is it is recoverable. It's likely to come slowly, so you can't hurry it up. So my point is, if you're going to need access to that capital, please use the Form 13 option and reduce this problem, the probability of this problem becoming